Welcome back. Good morning. We have, of course, the India-Pakistan situation, which, of course, is top of mind. And we've been updating you, and we will continue to update you in terms of what is happening out there. But last evening, you also had the India-UK FTA, which was signed. It's been a deal which has been negotiated for over 3 years and was finally done. And I think it's a big one, which I think perhaps sets the template for other bilateral trade deals with sort of other big trading partners as well. One of the sectors which I think has been in so much focus around this in a positive way is the textile sector, the labor-intensive textile sector. Siva Ganapathi is Vice Chairman and Managing Director at Gokaldas Exports. He's now joining us. Siva, good morning. Good to have you with us here. Thank you for your time. And thank you for joining us. I know you're unwell, so good to get you on. So tell us, Siva, and I think at this point in time, we can only talk in terms of some large numbers and maybe use experience from other countries which signed similar bilateral deals. Bangladesh, for example. What is the size of the industry now? Apparels, let's stick to that. What is the potential for it to grow to post this FTA?
So if you look at, Bangladesh's exports to UK, it's almost 4 billion. China's exports is 5 billion. And India is about 1.5 billion or something like that. So Bangladesh is large, thanks to FTA, thanks to duty-free access, because of it being a low-cost country. So that gives them a special access, tariff-free access to UK market. They have a 12% advantage over India, which now through this FTA is nullified. So we get a level playing field with Bangladesh, and currently Bangladesh itself is facing some problems related to its own internal stability. On top of it, if India gets a level playing field with Bangladesh through this FTA, there is a good likelihood that a lot more orders will get spread out between Bangladesh and India. India, if you recall, has got a historically great affinity with UK. There is a large Indian diaspora. UK understands India well. And on top of it, if we get a duty-free access into that country, I presume that there must be a lot more opportunity to source from India. In anticipation, several brands have been socializing, sourcing from India market. Now this will get an incremental fill-up and will, rise very quickly. So I see this as almost $1 billion opportunity for India, incremental opportunity for India, between goods that are produced in Bangladesh as well as in China. If you see China's exports to UK, out of the 5 billion, almost 1 billion is cotton-based garments. 4 billion is MMF, which will be a bit difficult to move out of China. But that 1 billion is a huge opportunity where we will have a 12% advantage in cost over China. So it's a huge opportunity, I would say. UK is a large market too.
Right. Siva, sorry. So $1 billion incremental opportunity because of this FTA for India.
That's what that's my reckoning.
And this 1 billion is overall textiles or apparels?
Apparel. I'm talking only apparel.
Simple. Okay. That is one. And just run us through the tariffs. You said we have a 12% advantage over China. And
That's
we are
correct.
now at par with Bangladesh.
That's correct. Going forward, as and when this FTA comes into effect.
Okay. And this is based on what the tariffs, what are Bangladeshi products tariffed at by UK and what are Chinese products tariffed at by UK compared to what we are now going to be tariffed at, right?
Correct.
So at par with Bangladesh, 12% advantage to China. Got it.
Right.
All right. Hi, Mr. Ganapathi, and thanks a lot for joining in, sir. For your company per se, Europe as a percentage of your total mix, I think it was in mid-single digits. Could you help us out with your exposure to UK? What is it? And since now we have this FTA that will give us a bit of a tailwind, for your company, where do you see the UK market go up in terms of a contribution of revenues?
So historically, we've been focused on US market, which is a very large market, and we get, we were at level playing field with other countries because, United States charges the same tariff across the globe, barring some African countries. We do have UK-based customers, and currently our revenues from UK would be of the order of about 250 crores per annum or thereabouts. So about say 5% of our revenue. I see that can go up significantly. We do have a good mix of UK-based customers. We have fairly large customers that we work with, and we do see potential to expand that relationship. In fact, some of those will pretty quickly expand as we go forward.
No, I think that is interesting. Is there any way you are one of the larger players, Siva, with a lot of capacity?
Right.
How does this help this 1 billion incremental? Any way to look at how much could your share be?
See, I think the larger players will definitely have an advantage. It all depends on how much capacity one can bring to bear to take advantage of this. And I'm also hopeful that with other FTAs in the pipeline, that is with EU and hopefully with US as well, we should see a good amount of tailwind for India. But in the meanwhile, if we stick to UK, I think those who can put up capacities will have the advantage. We have capacities coming up as we speak. We have 3 new factories in the works, and we will work towards offering those capacities to customers.
Any big numbers? Any way to talk about those?
No, these are bit early days because these FTAs will have to be ratified by the different by both these governments. It has to be announced. The custom portals have to be changed. I think by the time the FTA kicks in or comes into effect, it will be anywhere between 3 months to 6 months. I'm not sure of the timeline, but it should take some time. This is a good time for us to prepare ourselves, have more dialogue with the customers, and I think we should have a good swing up from the second half of the year, and really see that benefit coming, the next financial year.
All right. So from 5% of a total contribution going to the UK, or as a percentage of your business, you have capacities coming on stream. For the time being, I think it's more than 80% to the United States. How much can the UK contribute as a percentage of your business mix, sir?
I think we can double, because it's off a small base, right? So we can grow. I mean, we can grow even more than that.
All right, I've got that. Siva, in terms of profitability, is there an advantage selling to the UK compared to other regions, or not really?
So, with FTA, always it benefits, right? So if there is a 12%, duty benefit, then obviously there is some benefit that one could, seek. So that should come in. It all gets competed away at some point. So, we will have to see how that plays out.
Okay, all right. So, I know we called you with regard to what's happening with regard to this UK FTA that's progress, but what about in the United States? If you could just brief us about how have things moved in the last month, 45 days or so. Because of these tariffs that have come in place, has there been a big slowdown? There's a lot of uncertainty, I'm sure, out there in the US markets.
Yes, there is an uncertainty. There are twin uncertainties. One is uncertainty with respect to the tariff, and the other is the uncertainty with respect to how is the US market, the consumer market, going to pan out over the next 6 months to 12 months. So there's a fear that there could be some degree of recession or a slowdown, and brands are tweaking down their inventory just in case they don't, carry the risk of excess inventory, particularly carrying excess inventory at a higher price, paying higher tariff.
So are they asking for discounts, sir? Are they asking the global retailers?
Of course they are. So they're trying to, seek support from the supply chain, and there is a dialogue going on across the supply chain for some discounts for this 90-day period. The problem is beyond that. So if, for example, if an order is placed today, by the time the order gets delivered, it will be post the 90-day tariff window. And we don't know what the tariff is going to be post the 90-day tariff window. So how do you place an order now without having any clarity on whether the tariff, the incremental tariff, the reciprocal tariff, is 10%, 26%, 30%? What is that number? And how do brands place those orders? So this is the challenge that most brands have, and they are holding back order placement till they get some clarity. So this is going to impact not only the margins because of some of the discounts that we're negotiating with them. These are early days still, and because of order placement being held in abeyance because of lack of clarity on tariff.
Sure. All right, Mr. Siva Ramakrishnan, thank you very much for joining in and giving us your perspective on what's a landmark deal for India. The UK-India FTA finally signed. Of course, great news for apparel exporters, textile and apparel. And it's not just actually apparel and textiles, leather, gems and jewelry. There's a whole range of other sectors where tariffs become zero for Indian exporters. So big news coming in. And we'll discuss the other part of this as well, which is that from the India perspective, the duties on Scotch, UK Scotch or, liquor, EU liquor, those duties will be lowered as well. So we need to watch out for how Indian giants like, say, Radico or etc., how they deal with the competition.